Good morning, everyone. Today is March the 22nd. It is a Friday. We've got weekly options expiring, and we've got charts that are moving very aggressively to the upside. So my commentary this morning in the blog was elevator down, escalator up. And you'll notice the deep fade in December gave us these January motions that sort of bounced through the edge, as well as these February motions that dipped, and now we are even higher. Chances are moving into this level. This level is 2887 to 2889. My thought is the following. This is a very big alerts feature that we have just seen. Look at how many times this number has been tested. It is a very important number. If we sit above 2850 today, we are going to climb through this elevator shaft into the next line of congestion and potential resistance. That lies anywhere between 2886 all the way up to 2910. And I've got to tell you, frankly, at those spaces, we would be extremely extended from this formation in general. The Fed is pushing up the markets. People are reading things very generally in terms as Fed says no more interest rate hikes. Fed says no more balance sheet adjustments. That's going to mean more upside pressure. And so people jump in and the crowd follows. But the fact of the matter is that we've got slowing jobs, slowing PMIs, slowing housing. And so all of this slowing is putting us in a relative area that I suspect what we end up doing is chopping through for the majority of the year. Now, I've said that, I don't know, well, like 100 times. And so my thought is, that is still what holds, but the question becomes, well, how do I trade intraday in this motion? I've had a ton of bullish action, a ton of bearish action, and I'm still sitting in an area of low volume that I am likely to test. And so the path of least resistance is still upward. Here's the rub. I could have said that exact thing right here at the end of February, where everybody came into prior resistance and then rotated off in the first week of March and then turned right around and moved right back up. We could see the same sort of thing here. So the question is, can I hold the prior highs showing? Listen, I have probably 30 alerts from the price action around 28.49. Absolutely. Just over and over and over and over again. It's an important zone. That zone takes us all the way down to 42. So the fact of the matter is, if we fade and then we hold 42.50, we've still got an upshot. If we fade and we cannot get back up over 42.50, that's going to give us more drift. We've got negative daily divergence, but listen, we had negative daily divergence yesterday and it still led us higher. So you have to look at the trend. The trend says bullish, so it is the deep pullbacks that give us the buy zones. And because we are sitting in a very tenuous area that really also has low volume, we could dip in here and pull forward. My thought is, if you fail this daily area and you're looking for a long, it's best to step back. The weekly support zones are between 28.12 and 28.14. That's the next likely area big group of buyers can come in. That happened pre-market yesterday. It could happen in the middle of the market today, but that's what you're watching. If you're looking for a short, best to wait for it to lose this level and then fail the retest that brings the chart lower. I know, very long. Take a look at this. Blew right through all our levels, went through the gap in this contract, right? Next week, I think I'll bring the composite contract up and we will work with that. But now we can see relative resistance here. Nothing in the pocket until 74.83, which looks fairly good, right? And then 74.61. But we are looking at those regions for bounce actions. If the bounces fade, listen, we don't really have technical divergence here, but this is a fleeing to tech because the financials are going to be under pressure. And if the financials are going to be under pressure, people that are running in the market are going to have to rotate somewhere. They're rotating to tech. Does tech deserve that? I don't know, right? I mean, we can hear terms about late cycle economy, blah, 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 blah. And who knows, folks? Most of this stuff is driven by airwaves and people moving in and out. It is a hair trigger, you do this, I'll do that sort of environment that, cooler heads do not prevail here. They don't. So what we have to think about is, what is the motion telling us? It's giving us upside. The upsides could be deeper. Before the bounce higher, the downside could be deeper. And you know what? We've got movement all the way to 75.98. You can tell by my chatter that I believe this is way overdone. I really do. But I'm not going to step in front of a train. Unfortunately, because I feel it's way overdone, I also can't get involved in any kind of meaningful way to the upside unless my dips are significantly deep. And I love the area around 73.30, 73.24. It's a good zone. And right now, what I feel we've done is look at the extension. If I draw Fibonacci here, and I know this morning's report is going to be really long, and I apologize for that. Let's do Fibonacci. And let's do the, oh, crumbs. I picked the wrong one. Crud. Look at where this is. 214%, right? I know you can't see that, but that's approximately where that sits. That is a really big price extension. And it's no wonder that it's backing off of that zone, but, it's bullish. So it's going to pull into support, and people are going to get involved. And then if it comes into a lower high, we have a different discussion. But right now, everybody's trying to hold the edge. In the YM, a little more tenuous, right? Boeing is saying, hey, listen, we're going to put a warning light on there. People are saying, hey, we don't want our Boeing Max anymore. They're canceling orders. Literally, if people get, whipsawed in this mess, Boeing's going to have a $1 billion haircut, right? And we can look at Boeing at some juncture, but we won't look at it now. This is really what we are seeing in general, this sideways action because the Dow is weighted. So resistance, this was yesterday's motion. It's coming into support. Flat action says we could come down into here. That's the exact same thing that happened yesterday. Moving into support, bouncing into resistance, sitting at resistance, coming back to support, negative divergence, sitting in the neutral zone. All of that says my highs are going to be sold off. My lows in this region are very likely to be bought. If we don't buy and quickly move, more downside is ahead. Oil, my thought is, hey, listen, traders are going to push it up into that market and then they're going to trim their gains. It stopped below this 60-30 area. I said, hey, you know what? Likely to come into that zone and then above it, 61.72. It stopped here. It faded the one day and now it's on the second day of fade. So what is the storyboard? People are just taking profit. That's the only story right there, right? They're taking profit. And where are they going to take profit into? Frontline support. Where is that likely to be? 58.90. Heavy congestion, 58.60. Watch these edges. Watch these edges for the first group of buyers to come into play. You can see the rising move up, the pullback down. Everything is still bullish. There is a deep level down here. I don't think that happens at all. We'll see what goes on in general, but don't rush in here because they could have a lot to drift off before the next rise to the upside. I suggest pullback formation is going to be our best bet, somewhere around 58.20. All right, so what's happening here? The breakout, the return to the edge of motion and still holding 1306. What does this mean? That we're range bound. Everything is in the neutral zone. All the momentum is in the neutral zone. And so this still tells us don't buy the breakout. Instead, because our trend is bullish, consider buying the pullback. Listen, you don't want to buy a pullback if the trend is bearish. The probability is not in your favor. But if you've got flat to bullish motion, your deep pullbacks are going to give you buying pressures. Of course, you never know whether that pullback is going to hold or not. We never know anything for sure in the market, but probability sits on our side if we look for the deep pullbacks that hold This should be the case. The dollar is going to be weaker. That's going to push these guys stronger. But there's not a significant flight to safety, which is what a lot of people think gold is all about. And so my thought is it's going to sit in this range because things are being protected, in quotations right there, by the Fed. Good luck trading today. Have a great weekend. Remember, sleep is good for the brain. Don't put it to the side. See you guys on Monday.